Kumar Infraprojects Limited just released the latest earnings, quarter one fiscal year 2026. Behind me, we have the investor presentations showing the results of quarter one fiscal year 2026. So let's check out these results. Okay, so first of all, we have the quarter one fiscal year 2026 key highlights consolidated. We first have revenue. It has increased by 16% year on year, now stands at 1,484 crore rupees. Then we have EBITDA, which has increased by 18% year on year to 217 crores. Then we have earnings before interest and taxes, 21%, 184 crores. Profit after tax, 19% growth, now 103 crores this quarter. Then cash profit after tax, which is profit after tax when depreciation and amortization, which are non-cash expenses, were added back to profit after tax. They're up 16% year over year, 148 crores. Overall, earnings per share stood around 13.7 rupees, uh, okay, as compared to 11.5 rupees in quarter one. Moving on, let's check out some more results in even more detail. So here we have the profit and loss count. Again, we already saw revenue and all revenue growth. Let's look at the margins. Margins improved from 14.4% 12 months ago to 14.6%. Here we can see the EBIT margin improved from 11.9 to 12.4, and profit after tax margin improved from 6.8 to 7%. Moving on, we have the revenue breakup. Let me actually zoom in. So, quarter one, fiscal year 2026, where did this company get its revenue from? So, 17% of its revenue comes from metro. So, any construction work it gets involving metro, the underground area, 17%. Then 18% of its revenue is getting from civil and others. Let me zoom in a bit more. 23% it's getting from metro work, again, elevated. So a lot of construction relating to metro. 20% of revenues coming from elevated corridors slash flyovers. 20%, I believe one fifth of revenue coming from around flyovers and water, 4%, 18% coming from roads and road tunnels. So it seems that its construction work seems pretty diversified across these segments. One fifth coming from here, one fifth coming from here, etc. So then we have the geographic breakup, and this is a bit concentrated, to be honest. I mean, it really is a bit concentrated. Uh, but okay, it's still fine because Maharashtra is a massive state. 63% of revenue coming from Maharashtra. Then we have 24%. I believe that's Gujarat. Yes, I believe that is Gujarat. 24% coming from Gujarat. Or is that NCR? I'm confused. Yeah, I think I have it wrong. 63% of revenue comes from Maharashtra. I believe 24% of revenue actually comes from NCR region. 5% I believe comes from Gujarat. Another 5% comes from Tamil Nadu and 3% coming from Uttar Pradesh. So majority Maharashtra and 24% the NCR region. And then we have the smaller segments. Moving on, we have the current debt profile. Very important. Let me make myself smaller. You will see first of all the long-term debt. Here we have 325 crores. Long-term debt, including the current maturities of long-term debt. So 325 crores, big increase from, I guess, fiscal year 2025's 264. So long-term debt has increased. And we see the short-term debt is currently standing at 399 crores. And overall debt stands at around 723 crores. If you see the debt equity, when we are comparing debt equity, it's at a very nice 0.23%. So debt is way smaller than all equity the company has. Here we can see the gross debt to equity ratio was at a comfortable 0.3x as on June 30, 2025. It's rated. So ICRA, ICRA, a very credible rating agencies, has rated it A plus, and net debt to equity ratio is at negative 0.05. So net debt is gross debt minus cash and cash equivalents. So it seems that its cash and cash equivalents are more than its net debt. So net debt is actually negative because it has more cash and cash equivalents than its overall, I believe, long-term debt. Moving on, we have one more last thing to see. So it seems that the debt levels are comfortable. Last thing we can see is, yes, the order book analysis. Order book, all the construction work, all the different orders this company has gotten. And here we can see robust order book of 20,946 crores. Very nice. We've already seen the segment wise breakup and geographically. So that's it. Have a nice day.